to our next guest. Do we have Mr. Sachin Shah? All right, we'll go across to Mr. Sachin Shah, who's a fund manager at Emkay Investment Managers, and also joining on the technical side is Kunal Sarogi, CEO and editor at Equity Rush. Good afternoon to both of you, gentlemen. Sachin, let me come to you first and talk about the new press release which you guys have come out, which says the Emerging Star Fund, which is a 5-year close-ended fund where you're looking at a fundraising commitment rather of almost 200 to 300 crore. Could you take us through the basic contours of this?
Sure. So, Emkay Emerging Stars Fund is the maiden fund launched by Emkay Global as a sponsor. And as you rightly said, this is going to be a 5-year close-ended fund. And we are essentially going to be investing in the small cap space. So the way we've actually defined this space is the companies where the market cap, if you rank them in the way of market cap, it will be in the range of 301 to 1000. Which essentially in today's context, the market cap of these companies will be in the range of rupees 500 crore to 5,000 crores. And within that also, the sweet spot that we've actually identified are companies which have a market cap ranking in the range of 400 to 700, which essentially in the today's context, the market cap of these companies will be in the range of rupees 1,000 crore to 3,000 crores. Now, we strongly believe that if we can identify some of the good promoters and managements and the good businesses in that space, then in the next 3-4 years, we have a huge potential to not only get the earnings growth, but also the P re-rating when these companies actually deliver profits in the range of 150 to 200 crores in the next 3-4 years. So that's the space that we really want to capitalize on, and that's the product that we've actually launched for some of the HNI investors.
Mm-hmm. So you are basically looking at, investing into the small cap to some mid cap companies which will be on the smaller side once again. But do you see opportunities in large cap as well, or you think that right now, the mandate of your fund remains on the small cap side, but in general, what's your view on the large cap side? Is the market overvalued already? Do you see a correction here on?
So, we also run simultaneously portfolio management services, and there we have strategies where we invest in large cap stocks. We also have a flagship product, which is a multi-cap portfolio, Emkay Capital Builder, where we invest across large, mid and small. So, we do find some selective opportunities within the large caps also. It could be some of the selective private sector banking and private sector housing finance companies. It could be some of the large pharma companies. It could also be some of the companies within the space of travel and tourism. So there are definitely some selective opportunities within the large caps, mid cap and small cap across, and there are always opportunities there. But broadly speaking, I agree with you that markets definitely at this point in time are a bit overheated. There is some bit of an euphoria. The risk reward is probably not too much in favor of investors going whole hog. So we are definitely being a little slow in investing at this point in time.
Sachin, what's your view on insurance companies? Actually, if you look at the GIC listing today, it has remained tepid, and some other insurance IPOs also have not really been very successful in terms of the listing gains. What's your view on this sector and these IPOs?
See, clearly insurance is a sunrising industry in this country. I think the penetration levels itself are so low that for the next few years the growth is going to be very strong. In fact, I think it's the best part of this business is that it has a lot of longevity, right? So this is one business which actually, if it is managed well, it not only generates huge amount of cash flows, but even for many it does that for longer period of time. We've seen that with some of the international successful investors making tons of money in this sector. So clearly this is one new sector for investors. So I guess there are two things to it. One is that the investors themselves will take time to really understand and evaluate these businesses. That's one. And second is also that we will have to see that in the next 2, 3, 4 years how these companies actually perform in terms of their management of their cash flows and their investments as far as the insurance business is concerned. But definitely this is one space which should be on the radar of most of the serious long-term investors.
Sachin, and would you be buying the PSU banks now after the recapitalization news? We've already seen a big surge coming about, but majority of the analysts are of the view that this is just the beginning. So you being a fund manager, would you now buy these PSU stocks?
So the way I would like to look at it is that we would now definitely reevaluate our stand, because for a while, for almost last 3, 4, 5 years, this was definitely not on our radar. We were only looking at investing in the private sector BFSI space. But with the current move and with the kind of the backing that the government has given to the PSU banks now, we would definitely like to evaluate them on a completely fresh basis, and then probably take a final call.
Okay, and suppose you had to keep the overall weightage of financials intact, will it be advisable to reduce the holdings in private sector banks or private NBFCs and move to PSU banks?
Frankly, the way we invest is that our buying and selling decisions are both independent of each other. So just because I want to sell something, I will not buy, or just because I want to buy something, I'll not be forced to sell something. Yes, of course, we also have to maintain our allocation disciplines as far as sectoral allocations are concerned, but we won't just sell something because we want to buy something. So both are very independent decisions for us.
And what's your call on private NBFCs really? How do you see these valuations? Have you been booking profit already?
Yes, we have been, I would say, selling or booking profits in some of the selective NBFCs in the last 1.5 years now. So we've been actually reducing our weights to the overall BFSI space for the last 12 months or so.
Sachin, what's your view on this space? Do you like anything? Do you like companies like GMR and GVK? They have been also deleveraging their balance sheet.
Like, so far actually we've been avoiding investing in most of this space. But yes, we are always open to looking at new developments that happen in the sector and how some of these companies try to actually benefit from it, and also try to get rid of some of their legacy challenges. So if some of them are actually able to deliver in the next few quarters, we will definitely look at them.
Sachin, do you like L&T?
Well, clearly L&T is one of the best infrastructure companies in this country today. And if the infrastructure focus is coming back from the government side, from the financing side, now that the PSU bank should probably have decent balance sheets to grow and fund some of the large financing infrastructure projects, L&T definitely should be one of the big gainers. It's one of the best managements, and we are also seeing a lot of reforms happening in that company, which probably will play out very positively in the next few years. So L&T is definitely going to be on the top of our radar for the next few quarters.
Sachin, before we move on to IT, one last question on the government stimulus actually. Is it really a stimulus to the PSU banking sector, or is it an economic stimulus really? The capitalization is done with a view to generate jobs and to create a kind of boost to the economy. How would you really like to play it? I mean, options should not be limited to PSU banking or a few infra companies. How would your ideal portfolio strategy be actually built on looking at the kind of commitment that government is willing to make?
Well, I agree with you, but I think let's start with the first thing, that why this was done. So from the way I look at it is that it's clearly the lifeline, one additional lifeline, or one more time the lifeline has been given to the PSU banks, because whether we like it or not, the kind of the net worth and the kind of the NPAs that most of the PSU banks were sitting on today, barring SBI, it was really very difficult for them to continue to grow in the next few years unless this was done. So that is really the core of it, is the way I would like to look at it, that this is a lifeline given to the PSU banks one more time, and hopefully they will now make a good use of it in the next few years. And now comes the second part of what you were actually mentioning, that if they actually make the good use of this lifeline, then there could be a huge multiplier effect to the economy. So if the resources are channelized in the right direction, then I think it can have a multiple impact across the economic sectors, across the different urban, rural, all around the country. So I think the consequences are going to be far, far superior than one can really imagine today, provided the resources are channelized in the right direction.
Well, Sachin, what's your strategy on IT right now?
So, we believe that the sector is definitely facing some bit of headwinds, and the growth is going to be just about maybe, high single digits to low double digits, which is something which doesn't really excite us a lot, because we like to typically invest where the growth rates are at least in the teen to kind of a high double digit kind of a rate. So we would like to wait and watch for the IT sector for some more quarters, maybe at least 1 or 2 quarters, before we get the visibility that the demand is actually coming back for some of these companies. So at this point in time, we are actually underweight on the sector.
And Sachin, before I let you go, which are your top investment themes going into 2018?
So we clearly feel that if we can get the right valuation, private sector and the banking should be a good space even now, because the growth rates over there are pretty decent and the asset quality is also pretty good. We also believe that auto and auto ancillary can be actually a big theme in the next 2, 3, 4 years, because we believe that the discretionary consumerism spend that we are seeing is going to be very large in that space, and some of the auto ancillaries will actually benefit quite significantly for the next 3, 4 years.
Okay, thanks a lot, Sachin, for taking time out for us.